Lululemon stock is up over 9% after reporting great third quarter earnings. The stock since last August is up now over 60%. Looking at these earnings, I'm not surprised, I'm not shocked at all. This was exactly what I was expecting. Okay, maybe a few percentage points here and there, but the company has been doing great over the past year and still doing great. It's only the market that did not really understand what was happening. This was a classic time that Mr. Market was wrong. Let's just have a look at the earnings to understand really what is happening to this company. Sales are up year over year for the third quarter, 9%, including 33% growth internationally. You will see that if you compare on a constant currency basis, then the sales growth internationally is only 30%. That's because over the third quarter, the dollar was actually a little weaker compared to other currencies. But now this is going to change. Since Donald Trump was elected, the dollar got stronger, and we need to consider that in the coming quarters, maybe this is going to be reflected on the sales of Lululemon. But we, as value investors, we don't really care about these macroeconomic things. Over the long term, it doesn't really matter. What matters is that the comparable sales is up only 4%. It means that Lululemon, yes, it has been growing, but it's not really because the business has been doing so well. It's also because they have been opening new stores all over the world. And if you look at the United States, comparable sales are actually down 2%. I'm not worried about this. The management talk about it during the conference calls. You can have a look. I'm not going to go into details. It's just the cycle. It's the way the economy was, the economy is. But over the long term, of course, we should expect this to keep growing. We also need to understand that this is a trendy product. So if there is a new product that is very trendy, people are going to buy it. That doesn't mean that they will keep buying the same product. They have to develop new product constantly. So over the long term, I'm not saying that growth in the US will grow that much. It's going to be 2-3% a year, but not that much. And of course, they keep opening new stores to push this growth. What is really growing the business right now is international growth. China and other countries. China, they have been expanding, but in Europe, not that much. It's only next year, for example, that they are entering the Czech Republic, Turkey, and a few other countries. And the big advantage that this company has is that they don't require much capital to grow. These stores that they are opening, they don't own the stores. It's just leased. And this is a company with great margins. The products they sell are not cheap products. They can sell these products even though it is retail with high margins. And they can afford these leases, grow with very little capital needed to be invested. And most of this capital today is of course being used to grow the business, but some of it is being used to buy back shares while the shares are cheap. This is another news that the market really liked. The market also liked the fact that the forecast for 2024 for the whole year has been improved. That's why I said that this is the easiest buy I have seen in many years. This was an easy stock to buy. There was no complicated accounting to do. It was not a business hard to understand. If you tell me my best investment, GameStop, it was complicated. The accounting was complicated. You had to really go a little deep to see that, okay, the company is not losing that much money and there's a new console cycle. Things are going to improve, to change. I invested in Meta in 2022. It was a little hard to make such an investment because you had to understand that really the company was going to the metaverse, spending billions there, and with no clear view of being profitable. That was a risk. But with Lululemon, there's no such risk. If I will compare it with Crocs, now one of my largest positions, have the huge underperformance, but Lululemon did not really have such an issue. We had inventory issues a few years ago, but that's it. That's it. The market overreacted. The stock price was at the same price it was in 2019, while revenues tripled in that time. Earnings per share grew by 3.5 times in that period, but the stock price was the same. Today I will say that Lululemon is still undervalued. You can find the whole analysis on the Superinvestors Club. You can find all my analysis there, including investing course for beginners, investing course on how to read financial reports, and many other things that I'm working on. You'll find everything there. If you're interested, you can also have a free trial. I'll put the link in the description. Coming back to Lululemon, it is undervalued, but I'm not going to buy more. It's not because my position is big enough. I wish I had bought more. It's only because I need a bigger margin of safety. This is retail. When it comes to retailers, because you don't know where the economy is going next, especially China, even the US, the economy is overheated. Consumer sentiment has been quite low recently, and this is correlated for some reason with the stock price of Lululemon. Actually, it's Lululemon which is correlated with consumer sentiment. But I want a bigger margin of safety with retail, and I wasn't buying Lululemon above $300 a share, and I'm still maintaining that margin of safety. And last month on one day the stock price fell below that $300 and I bought some more shares. So you see, you need to take the opportunity whenever you find it. I did not buy that much of Lululemon because I had other stocks that were much cheaper for me. For example, this stock that I'm currently buying, Evolution Gaming, I will recommend you watch this video next. Have a nice day and goodbye.